Is the long-term bottom in oil in? Dan, it's been 6 weeks since you and I have been together, and it looks as if you're getting more bullish on oil, but conservatively so.
Yeah, that's right. And before I left, I said, you know, I didn't think that oil would make a new low. And in fact, in some ways, it kind of spectacularly did on one day when this China disaster kind of hit all of the capital markets, bouncing below $40, but now recovering again to that kind of W recovery that we were looking for. Now, out of all the things that are plaguing the oil market right now, financially plaguing the oil market, I think that China is absolutely number one on the list. It's what's plaguing the equity markets right now. Every piece of news out of China seems to run the Dow up 300 points or down 300 points. Oil is no different. It's going to be very volatile over the next couple of months. And maybe even a quarter or two. But what I don't see a new major low being set here. I think they're in for the long haul. I don't think we're going to see anything below $40 anymore, and that's quite a call to make considering we're sitting at $44. There's not a long way to go.
Right. Well, where production is right now and all the other parameters, is this where oil should be trading? I mean, should it have been at 110? Should it have been 30? It feels like this $40 to $60 range is sustainable based on production levels.
Right now, there's so much pressure on the oil market. Now, we know that it's not sustainable. We know that 35% of oil production doesn't come out of the ground for $40, $45, just doesn't. But there's been absolutely no movement from OPEC. The Saudis are continuing to pump at high levels. The Russians, there was a rumor that the Russians were going to get together with the Saudis and kind of control production levels. Sechin came out yesterday and said that's entirely ridiculous. It's not going to happen. Texas oil continues to make a record for 2015. There is some indication that Bakken oil is kind of flattening out. Some indications are that production is going to start coming offline within the next several months and quarters. But for right now, there's too much pressure on the oil market for it to rally significantly. We had a lot of oil shorts in the market. Those were kind of chased out to a certain degree when we went below 40 for a brief moment. They've been kind of chased out. I really think that we've seen the lows, but that doesn't mean that I think that oil is going to be constructive anytime soon.
So as an energy investor, what are you looking at in the subsectors? Are you buying the E&P names, the majors, or the refiners at this point?
Well, I think that, for example, the refiners are something you stay away from. They've done particularly well in a very low crude oil environment. I don't think it stays that way. Cracks are coming in. A lot of different things are happening where the refiners are probably going to do less well going forward. But there are some places you can go for the long haul. Some oil services. I mean, you look at Halliburton's buy of Cameron oil, and that to me strikes me as a good opportunity for someone to buy oil services on the cheap. I think you can follow Halliburton's lead and buy some of these. I particularly like Schlumberger. And some of the majors I think are okay as long-term bond positions. I particularly like Total, which is the French giant, and Exxon. And I think that some of the smaller E&Ps that are going to live through this bust period and come out stronger on the back end. We've talked about them before, EOG, Hess, Cimarex. These are names you can look at as well.
All right. Thanks very much, Dan. Great to have you back.
All right, thanks.
For TheStreet in New York, I'm Jill Malandrino.